Delta earnings. Let's review what's going on with Delta earnings and what kind of potential leading indicator this could have for the economy. Keep in mind, myself and many of us in the courses on building your wealth, we've been watching inflation through earnings in the last really year. And one of the things that we've noticed is this massive inflection point. It's more than a year, actually. It's more like 18 months. We noticed and I want you to pay attention to this when it comes to earnings. So I'm saying it before we get to Disney earnings on purpose, Delta earnings here on purpose. In Q1 2022, January, we noticed massive inflation. Every single company was bragging about having pricing power. And I'm like, look, if everybody's saying they got a massive PP, not everybody's got a massive PP. Massive PP comes from massive brand value and people's willingness to buy a product in almost any circumstances, no matter how hard. That was the case in January 2022. Everybody was buying everything still, and inflation was very, very rampant. Over the last 6 months, we've seen that almost evaporate. Breaking down Q4, Q1 earnings, for example, given that Q2 we're just now starting, breaking down Q4 and Q1 by going through the actual fundamentals and looking at what companies are doing with their cash, with their debt, with their inventories, with their revenues, with their net income, and what they're saying about inflation in earnings calls is a really, really good, in my opinion, leading indicator of what's happening with inflation. And everything that we've been reading over the past 6 months has made it very clear that the CPI numbers we got yesterday are what we would expect. It's because earnings are really good at forecasting this kind of stuff, in my opinion. So anyway, as a result, we're going to look at Delta. I just want you to be aware that the more we look at these companies, the more insight we broadly glean. And it's not going to be one company here or there that generally helps. It's that sort of average, that collective movement of everything. So with that said, let's take a quick look here at Delta. So the first thing that I always like to do when I do these earnings, at least what we do when we do these earnings with course members, is we go straight to balance sheets, cash flow statements, and of course the income statement before we get to any kind of commentary. So cash flows at Delta have more than 2x'd over here. You can see we're at about 1.8 billion in net income rather. Cash flows themselves are slightly up. We can see that here. Net cash provided by operating activity. So our net income rather, let me state this correctly, is up about 2x and a bit. We've got a little bit of a decline here in air traffic liability. In my opinion, this is a sign of potentially Delta becoming a little bit more organized with their cash to where they're able to catch up on some of their bills payable. Air traffic liability is usually when you go land at an airport, you have to pay landing fees and support service fees. So those are not just the landing fees, but then of course you have cleaning fees, you have fuel dump fees, fuel fill fees, toilet dump fees rather, and all the other support services you get from an airport oftentimes get thrown together under air traffic liability. You've got change in profit sharing. Big, massive increase over here. What else do we have? Let's look at net cash from investing. We've got plant, property, and equipment sitting somewhere around 1.4 billion. So many more investments coming in here from the airline industry. And this might be one of the reasons we actually have a bit of a leading indicator of not necessarily for inflation of general aviation inflation, but what you generally find, in my opinion, is when you have the airlines spending massive amounts of money on more planes, you're in a really great situation potentially for aerospace companies. Those are going to be your Boeings, your Airbus, your Embraer, mostly because if there's one place that still has inflation, in my opinion, it's aerospace. That is a place where you're still fraught with shortages. You're still waiting 2 years for planes. These airlines keep buying more and more planes. The regional planes are usually Embraers. The longer distance planes are usually Airbus and Boeing. And these companies are companies that are still dealing with rapid inflation. And so I really like looking at the airlines for that because I want to see inflation at some point roll over in the air business, like the aerospace business. But boy, we haven't been anywhere close to seeing that roll over yet. Payments on debt, look at this. They're really paying down their obligations here. And I like seeing this because the airlines have been so indebted. So not only are we paying down our air traffic liabilities much more than we were last year at this time. In fact, last year at this time they were growing, although that could also have been because there were fewer flights compared to now. Then you've got payments on debt. Finally, twice as much pay down now as you previously had. That's fantastic. So this already looks much stronger. Let's look at what we've got over here in ticket revenue. So we've got about an 18% increase in ticket for main cabin revenue, 25% increase in premium products. You are getting a lot of premiumization of the airlines as well. I personally wonder how that'll show up in inflation because CPI generally compares the same pricing for the same product or service every year. So they'll make adjustments for, okay, is this a Granny Smith apple or is this a Gala apple? And their goal is to try to minimize substitutions. Of course, when they need to, they make substitutions. Point of that is, you're generally not going to see the Bureau of Labor Statistics take a main cabin seat and replace it with like a first class seat. But you might compare first class to first class on Delta and main cabin on Delta. But seeing more of a revenue bump in premium products is not a surprise for me at Delta, mostly because a lot of the companies are really trying to focus on giving more of these or having more first class availability. In fact, some of the newer planes are being considered as having substantially larger first class areas than main cabin areas because people are just willing to pay more now, whether it's because the higher income individuals or middle to upper income individuals just have more money, or it's because people are just wanting to pay for more of an experience, or it's because people are tired of airlines getting so crammed and exhausting that they'll gladly pay for a little bit of a better experience. Who knows? 21% increase in loyalty travel awards. We've got their refinery business. So they actually also have stakes in oil and refining. The airlines use this as hedging. I always find that very interesting. Although refinery revenue is down 36%, it's actually very good usually when oil prices are down because kerosene prices are down. It's a huge line item for these airlines. So this is more of a headline inflation figure to see fuel costs come down substantially. So we like to see that. Let's jump on over to the main page and see what kind of items they're specifically paying attention to. So they're saying Delta is delivering to customers with strong operational performance and best-in-class service during the busy summer period. With this performance, we generated record revenue and profitability in June. Our people are the best professionals in the industry, proud to recognize their achievements. We've got $666 million in the first half towards next year's profit sharing. Consumer demand for travel remains robust. Against this constructive backdrop, we are increasing our 2023 earnings guidance to $6 to $7 per share, reiterating our recently updated outlook of $3 billion of free cash flow for the year. This is pretty strong. It's a pretty strong report. The CEO has said in at some point here, either in this document or I was reading about this a little bit before it went live, that they are expecting to be in the middle innings of travel demand, which is quite interesting because some folks were thinking that we might end up getting a rollover on travel demand, but it just seems like it keeps going. Delta's got 12 aircraft scheduled for delivery in 2027 and 8. They're looking for 12 more Airbuses, actually. They're trying to pay down $4 billion in debt, and they're really accelerating their debt repayment. This is what they're announcing. We saw that on the cash flow statement as well, though. You've got Delta passenger revenue at $13.2 billion, exceeding expectations of $12.75. Adjusted revenue coming in at $12.61, exceeding the $14.4. You've got net at $1.72 billion, exceeding the $1.5 expected, and EPS of a midpoint sitting at $2.40 expected for Q3 adjusted. The market was only looking for 2.06. So these are really good numbers here coming out versus expectations. Let's look at some of the commentary on demand and outlook. And we'll get a lot more insight from the earnings call as well, but let's get this started here. Robust demand is continuing in the September quarter, where we expect revenue to be similar to the June quarter, up 11% and 14% compared to the September quarter of 2022. Unit revenue strength continues. So really, what's remarkable about this, and it's probably going to help contribute to the market being at least somewhat happy here, is you've got more robust spending from the consumer, which is less recessionary. This is a broad leading indicator also of recession. If we were really heading into a recession, we shouldn't see a September quarter that is as strong as the June quarter. But in addition to that, we're seeing this coupled with less inflation. Fuel costs down 34%. Versus 2022, average fuel price of just $2.52 a gallon for kerosene, jet fuel. That's amazing. And listen to this. We expect in the September quarter non-fuel costs to decline 1 to 3%. So in other words, no recessionary indicator and even more fuel disinflation, actually deflation, quite frankly. Remember, disinflation is a lower rate of growth. Deflation is a decline in inflation. So more debt payoff, less recessionary indicator, less inflationary indicator. Couple this with what we've gotten from CPI. This is fantastic. This is a really good way to start off earnings season. I'm very excited about this. And even though I personally am not a big fan of investing in the airlines, mostly because I'm afraid at how much debt these companies have, they are turning this around. Looks like we've got about, I would say about $6 billion in cash and short-term investments. Looking at this quickly, I've only got about 30 seconds left to talk about Delta here. We've got current debts sitting at, current debts backing off loyalty programs and deferred revenues. We've got current debts sitting at about $25 billion in current debts. You've got long-term debts here in excess of at least $25 billion, again, taking out deferred revenues, probably closer to about $32 billion. Massive amounts of debt. Not extremely excited about this. But what I am excited about is you checking out those programs and building your wealth link down below, because we've got a massive coupon code linked down below expiring on the 26th Federal Reserve Day. And check out how you can bundle up to shadow me as well at meetkevin.com.
Now, I want you to know this. When it comes to AI, time is what's going to make you money. And if you can prove that value to an employer, you'll always be able to be employed. So this is another way of making sure that you don't get replaced